Okay, I mean, the timeline for completion is still within that 12 to 18 month period, but a lot of that really depends upon when we can get the next capital in and also resources around getting the right production orders in and just getting the right balance sheets right. So there's still scope. We still might be 2023 production run. It might slip, but it's just a bit uncertain out there in the world of COVID at the moment. But that's where we're running at the moment. Like every business at the moment, COVID has hit everybody. But I mean, I can give you the timeline for us. We listed in the end of January 2020. We thought we were going to start our earthworks almost immediately before the rain hit. And New Zealand went into lockdown for, I think, 8 to 10 weeks. And that just put a kibosh on that. We couldn't do anything with that. Then I was in negotiations with a group out of Europe, which was one of our customers. We started negotiations in December. And I'm not kidding you, the legal team and others came down with COVID. And then by the time they came back to work, it was the end of their financial year. And we didn't actually regroup on the customer agreement until May. Hence, that took so long. And now here we are trying to get people in for due diligence, not just investors, but also customers. We can't get them in. We can't get an MIQ spot. And you can't get into New Zealand. So it's having a real negative effect that way. Ironically, from a positive side, all I heard last year, 2020, from the Europeans was that their supply chains were decimated. Remember, our investment thesis and our strategy is vertically integrated. Well, it's not unusual for a lot of these plants in Europe not to be vertically integrated. So you could not get milk across the border to be processed. And now what I'm hearing on the telephones now with the Europeans and the Americans open, they're saying that there's potential food shortages with high food prices. The good thing about New Zealand being in this other hemisphere is it kind of helps flatten the milk curve, is what they say, and flatten the food curve. Yeah, so COVID's having a real impact, and God knows when we go forward again. Where will COVID be for New Zealand and for Europe in 2022? I don't know. All of the supply and purchase agreements are linked into the project timeline, so they can be extended where necessary. It's about getting the right timing for the right investors and for the right customers to be able to come in to the country. We put an announcement out there that we are slowing down the project, and that's basically a function of managing cash flow, managing capital, and managing expectations. That could all speed up again if everything fell into place on time. Okay, so first of all, you're right. China is a big consumer of dairy products. But from day one, this business was not set up to be for China. And I was one of the founders. And when I founded the business, it was 2016. So infant milk formula was a big driver. We also very quickly, I think it was in 2015, 2016, how the botulism scandal destroyed those sales for New Zealand. Then you have the SAMAR and all the regulatory lines. So just getting regulatory approval for infant milk formula to China is a real struggle. Then if you come into the whole milk powder and the skim milk powder and the dry dairy products, that's a little easier. But fortunately, our 3 customers at the moment, they're not China. They're looking for nutritional grade products outside of China. Now, we're not ruling out China, but you really need to have the right partner and the right relationships to do that. It's probably in the ballpark. I think one of the things you got to understand with GDT prices is they change. I think one of the other things you got to understand is that the commodity prices of dairy are going up as well. Plus, our products and the products that we have been asked to produce by our customers vary slightly. So I think, let me put it this way. The customers that we have are large multinationals and large global players. They know the products they're looking for. They know the quality of the product they're looking for. And they've got pretty stringent supply chain procedures that we've had to jump to and past. So these contracts aren't small, and they are of a significant size. But the exact dollar value, it'd be difficult to challenge you on those numbers, it'd be difficult to confirm those numbers. I think we're better off just waiting to see what the price points are of the various inputs as we get closer to it. We've got three global multinationals. One of them would be a large household name in the infant milk space. And the other two probably wouldn't know of from a consumer point of view, but if you're in the industry of food, dairy, nutritional products, you'll definitely know of them. All two are global players. I think they're probably the number one and two in their market, and they're based in the Northern Hemisphere. If that's okay, I just kind of like to leave it at that, but we're not dealing with mom and dad players. Probably the same as the other two customers, to be honest, which is a lot of the facilities that are built around the world are more commodity type facilities that try to be adapted for more nutritional products. Whereas we're, according to both Tetra and GEA, we're probably one of the most flexible plants that's going to be built out of the last 50 or so plants that has been built. So when you have a flexible plant, you have shorter shutdowns for different dryers. You can have different products in there, different milk streams and different non-dairy as well. And I suspect, well, I'm pretty confident what worked in favor of us was that flexibility. And then the second element is this whole ESG drive. I mean, one of the key things when we started this business is we wanted to be carbon friendly, net water, and we are. And that's been going from day one. And we went through a lot of hurdles in the early days of getting the consents to challenge that. So we passed that now flying colors. And it's funny, we're not even built, but we have to go through those ESG hurdles from a supply point of view. Look, I think it's probably changed for the better. And let's start with the ESG side. I mean, pollution is now recognized as agriculture as a polluter. So globally, pollution's been addressed at an agricultural level. From a food point of view, there's a massive drive for nutritional products. And Greg talks about that in the presentation. And dairy today is still the lowest source of nutritional products. And you're evolving up the food chain. You know, we're not just talking about infant milk formula. There's higher regulation on infant milk formula now, so you need to have a good product there. And then if you move into nutritional products, we're talking about whey protein drinks. We're talking about drinks that are used for medicinal purposes. So yeah, I think overall, as a whole, it is a good space to be in. And it is, what do they call it? Better for you foods. It is in that space. It is that nutritional food space. We have been very lucky from day one. We've had good support from one of our largest shareholders, one of the big dairy farmers in the area. One of the other guys who works for us is a very successful farmer in the area too. So we've had consistent and good discussions with the farmers. We are in the Waikato, so it can be quite sensitive. We haven't signed up any farmers yet, and that's deliberately so, because you're asking farmers to commit to supply, and we need to be certain of the date that we can receive the milk. So, but that's all under control. We've got draft agreements in place. We've had very positive discussions. And remember, we don't need a lot of the milk. We're a nutritional plant, so we're not a big commodity plant. We need a smaller portion of the milk. So yes, short answer, good conversations, good, shall we say, agreements of what we need to do, but no formal side agreements, deliberately so, from both parties. I mean, we went through a complete tender process with two of the largest players. We were very happy with the results of that tender process. We're a business-to-business company, so we're not a B2C player. So, I mean, if you take a look at our clients, they're all offshore players in the industry or the nutritional industry. And we're working with all of those players to gain access into other geographies. So in that line of thought, you could probably say yes. But we're business to business. So I guess the short answer is yes, but at the moment, there's no immediate discussion with a specific dairy player to do business with them for access to their market, but we're open to it. Look, we've got a great relationship with Alcyon. They're actively involved. They've been very supportive. Our understanding is that this was one of their trusts or one of their funds, and at all times they had to do this in specie distribution to the shareholders, and I believe they've done that. Okay, the entire project to build it is about 300 million Kiwi. The mix of debt and equity really depends upon the structure of how we bring that money together. Based on who the investors are, based on the structure, be it the listco, be it the opco, then what we will do is optimize the structure of the debt and the equity to maximize returns for shareholders. I mean, every business is in a situation where you're consistently trying to move forward on a day-to-day basis. We're very aware of our obligations. We're very aware of what we need to do. And at the moment, we're doing everything to raise the money. If we can't raise the money, we do have other plans. We do have other plans that we will look at. But at the moment, we're on track to raise the money. We have been buying stock. I mean, the directors are very heavily involved in the company, both as shareholders and actively involved. Two of the directors participated in the round before the release of the results, and we've pretty much been in the blackout until we made that announcement this week. I mean, we knew about those agreements, but we just had to formalize a few announcements and stuff. So the board are very supportive of this product. I don't really have a clue why the share price dropped, other than some people became non-believers and others thought they were believers and bought the price really cheap. I think what's important to look back at is that the fundamentals of the company today versus when we listed. We listed back in 2020. We had almost all of our consents. We had 0 customers. I think we had about 11 to 12 hectares. Today we've got 300 plus hectares. We've got all of our revenue. We got 3 customers for 30%, 35% of our capacity. They're major global brands. We've got a very good management team. We've got a pretty okay balance sheet. So that's where the business is today versus where it was at 20 cents. Sure, we've got a big hurdle to do, which is to go and raise the rest of the money to build a plant. But that hurdle has been there since the day we listed. As to why it's sold in the last couple of weeks and sold back up again, I don't know. But there's very little liquidity, and it does seem to trade by appointment.